actually going to execute on instead of the move that I actually executed on. Nice wordplay there. So essentially, I traded one trade, but it wasn't the trade in the direction that I was looking for. I actually traded the move to my PDRA, and then I didn't take the trade that I actually wanted in my original direction. Right. So essentially, this trade was on GU. And what happened on GU today is that we were bearish on the daily time frame. You can tell these breaks of structure to the downside, and we're clearly going down. The 4-hour was also bearish, and we had a 4-hour order block right here and a 4-hour fair value gap, right? At which point New York session opens, and we have hourly retracements into that order block and this fair value gap right here. More specifically, one could actually say we retraced all the way into the inverse fair value gap, which was pretty much, the fair value gap getting inversed by another fair value gap, right? And from there, we pretty much saw a hourly's bearish, 4 hours bearish, daily's bearish, but the 15-minute was still bullish. This is pretty much what didn't allow me to go short. Because the 15-minute was bullish, I couldn't actually enter off of a 1-minute break of structure. Because had the 5-minute been bearish, we would have been able to invalidate that with a 1-minute break. But if the 15 minutes bearish, if the 15 minutes bullish, a 1-minute break really doesn't mean much because it could be a 15-minute retracement. Does that make sense? So we were waiting for a 5-minute break, which took a little too long. We waited for this 5-minute break of structure, which happened right here, which I did mark out at the time and I was actually looking into. It's just, it was a little too late in the day for me to actually trade that. Really, it wasn't too late. I just already won, and I really just didn't feel like it, to be honest. But I probably could have took this trade. I just didn't like the risk to reward attached to it. But essentially, we had this 5-minute break of structure right here because this was 5-minute leg up and break of structure here. And then we retraced. Now, we didn't retrace enough, which didn't give me enough confidence in that trade. And yeah, that's pretty much the reason why we didn't execute. But had we executed, the trade that we were looking for was a 5-minute break, which we got, a retrace into premium, which would have been right here. Anywhere above here would have been fine. And our stops above that 5-minute high that was made. And we would have been targeting the 4-hour low for a good 1 to 9. And this was hit relatively fast, and it wasn't a complex trade. Now I'll actually go over the trade that we actually took. And this was the move towards here. So this was New York open. This is New York session open, meaning stock exchange. So we actually knew that this was a retracement. So the 15-minute was bullish, as you can tell right here, right? So for us to know that we could actually continue to long this and expect a market open liquidity sweep, which we had here, due to also the news coming out at 10 a.m., all of that was being anticipated. This is an experience thing, but now that you know, you can actually anticipate that news is actually something that takes liquidity in the opposing direction, usually, and also then makes the move to a real direction. Sometimes news will be bearish and only make a bullish move before it makes a real bearish move, right? So with that being said, what do we anticipate? We need to know if price is showing signs of actually sweeping liquidity or going a little bit higher and targeting this buy side. How do we know that that's actually going to happen, right? 15-minute change of character, bullish break of structure, bullish order block, right? Now, what could this be? We had a 5-minute break of structure right here on the way down here. If this 5-minute were to be valid, we would get a retracement and then we'd head lower, right? In the valid scenario case, this being the leg that retraced into the premium order block, this should have been the leg that would have, mark it out like this for more clarity. This leg should be able to go ahead, get here, and then go lower, right? But instead, this was a inducement to gain further liquidity and liquidate people who are selling early, and then take them out during New York Open to ultimately go in the desired direction. Now I'll take this out so that you guys have clarity. Right? See? Premium retracement, internal break of structure. We wait for a reaction for us to go lower, but instead we got a bullish reaction here. That's pretty much what led me to be able to execute actually on this trade so that I could know that this high would get taken at the very least. And I also targeted the inverse up top there. It's just that I thought we'd get to the top of the inverse, so I couldn't even take profit there. Very, very unfortunate. So I'm not going to lie and put my take profit there, even though my take profit was at the top of the inverse. This is where